It's been a few months. A lot has happened since we last spoke, and I did see your body in Vancouver from a distance, and you were engaged in an intense conversation. So I didn't want to interrupt, but here we are, and this is this is even better because at the Vancouver conference week, it's like you can't really have a one-on-one conversation very easily. So many people trying to get involved and chat and say hi. So yeah, this is a good venue.
Yeah, good, good. I'm looking forward to it. There is a lot going on, and we're in the midst of another fantastic sale on gold equities. So,
Yeah, let's start with the Vancouver conferences. Let's go back in time a few weeks. And what were some of your takeaways from who you spoke with there? Maybe some presentations that you watched. What was your overall, impression of that whole thing?
uh, yeah, what a question. I'm always blown away when I go to those conferences and I see people like John Black and Bob Wares standing in their booths. Kenny McNaughton at Camino Resources. I think he's the chairman now. But Kenny was responsible for some of the best of Silver Standard and was responsible for Pretium getting Bruce Jack. And he put Camino together years ago and did some really good geological work there, but probably not great financing work, and just in terms of who he brought in and sort of spreading it around Vancouver with lots of warrants, because that's really not his highest calling. But there he is, uh, in the Camino booth, ready to talk to investors about with the valuable things that have happened and the valuable things that are going to happen. And then when you move away from John Black and Bob Wares and Kenny McNaughton, uh, just a sea of companies with no visible outcome.
Hmm.
So
Yeah, go ahead.
yeah, I mean, yeah,
Just leave it there.
we'll we'll leave it there.
Did you listen to any presentations?
I don't really have that much time for those. I've heard them over and over again,
Uh-huh.
and I do, always want to listen to what Ross Beatty has to say, and I still find Rick Rule to be one of the most compelling public speakers in our industry. And now that he's not got his hands tied by being attached to a regulated entity anymore, I think that Rick is actually hitting it out of the park. And there's some content that he's put out where he talks about, some of the bigger things that are going on in the industry and oil and gas and coal and this debacle with First Quantum in Panama. And it's just really, really phenomenal content. So that's always of interest to me. But I do tend to find myself, I mean, I've invested probably now in almost 100 companies in this business, probably have 70 of them on right now. There's lots of people for me to catch up with and lots of people for me to talk to. And now that the real value in this business from a media standpoint has been widely distributed across social media. There isn't a nobody watches. BNN used to be called Report on Business Television, Rob TV, and maybe that's why they changed the name. And we all 20 years ago eagerly await Paul Van Eden getting on Rob TV, and he would move stocks significantly if he
Mm-hmm.
talked about them. And it was the same with Brent Cook when Brent took over Paul's business and Brent became the spokesman for the industry on Rob or BNN. And frequently during PDAC, I have a couple of big dinners at PDAC, and Brent would come over after he did his BNN segment at PDAC, and we'd all sort of, you know, chat about what he said and what he didn't say, and people at the table would be upset because he didn't mention their stocks, and that phase of the business is over, and I think potentially gone forever. So now I really find myself needing to, I've got to find, Jenny Many Dots or James Qantas, or I've got to find Tommy Humphreys, uh, or I've got to, there's just a whole bunch of people out there who are working very hard to get the sector to the forefront, and to report on what's going on in what is the sort of new form of journalism. So it's busy. It's really busy. I'm not. It's the sector has become the information in the sector has become as disorganized
Yes.
as it's been in years. And I'm
Yes.
and I'm devastated that you saw me and didn't come up to me, because
I'm sorry, man.
I would have liked to have seen the conference through the filter of your lens. But I did get to spend a bunch of time with Luke Tenhava and Martin Katzberg, who are really really good trusted friends in the business, and a lot of the Vancouver brokerage guys who are behind the scenes building companies and working stories. Those are really the people that I need to spend time with when I'm in Vancouver. So I don't get to see a lot of the presentations, but
Hmm.
yeah.
Yeah, I feel you. Yeah, those are some good points you made. Disorganized, yes.
Mm-hmm.
Disorganized and at times overwhelming and
Mm-hmm.
at times repetitive and extremely boring. And I say that with all the love in my heart. Yeah, it's challenging. I'm going to tell you a little secret, David. So when I was in Vancouver, I spoke. So I got in there like Thursday at some point, did my prep, met some people on Friday, did my spiel on Saturday morning, did some interviews. And at that point, I was just like, you know what? I just need to go chill and have dinner. Right. So I kind of skipped the whole rest of Saturday. And then I went to VRIC on Sunday and I stood in line for 20 minutes to get in. And then I go in there and they've cut the floor down by like a third and
Mm,
it's like packed. And within 5 minutes, I have 10 people talking to me. Right.
mm,
And that's great that people want to talk to me. I'm super grateful. But I also, within an hour, I was overwhelmed there too.
mm,
Right.
mm-hmm.
Um, and I listened to some presentations and they were good, but you got four speakers going at once is like very distracting. It's like sensory overload there.
Mm-hmm.
And so I was just happy to have some quiet meetings for the rest of the time and just enjoy Vancouver and head home. So I don't think I got the full experience like some people may have. And I'm going to skip out on PDAC 2 this year because I kind of just feel like I've done enough traveling for a bit.
Mm-hmm.
But I do want to talk to you about where we are at in this sector, right? So we had like a really nice move in November, maybe up to Christmas, and then things really started to go sour again. And obviously, the last week or so is just we've kind of hit some new lows, and a lot of big gold stocks, a lot of juniors are seeing no real volume on the bid. It's pretty bleak. Let's just be frank about it. It's pretty rough. And I did a video Sunday night, my weekly video, and I talked about how there's some parallels to late 2015 right now. And I know we've talked about this topic before,
Mm.
but it was like 4 or 5 months ago that we talked about it. And you said it's not as bad as 2015. So I want to check in with you again right now. How does this feel compared to late 2015? And how bad is it? Like, what's your sense?
Well, if it's 2015, which I think is actually a reasonable analogy, then it's going to be a pretty bleak year. And I wasn't certain last year. When I think about orienting myself in the current cycle, I think about the past cycles that I've been involved in, and certainly I was as invested in this cycle as I had ever been during 2014 and 2015. And not to be repetitive, but since we're talking about it, we had this capitulation sell-off between September and December of 2014. And I'll remind everyone that Pine Tree's debenture went into default, and that portfolio was getting liquidated. Ned Goodman had finally surrendered control of the super voting shares at Dundee to his sons, and he was getting put out of Dundee, and the Dundee resource portfolio was being sold off. Company was a shadow of itself after it had spun off Dream, which was a major part of its market cap. And portfolio managers had been, and sub-advisors had been fired and replaced by new portfolio managers who didn't want small caps at many of the gold funds. So you had this capitulation sell-off, as I would call it, and then a dead year in 2015. And 2015 was an inevitable reaction. There was no home for many of those stocks once you disintermediated them from the institutional portfolios that held them. There wasn't going to be an institutional audience for those shares going forward. So 2015 was exactly what you would expect. A bunch of nearly broke companies wandering around in the desert looking for a drop of water. And the industry shrunk to a size that could be supported by the capital base that was available to it. And 2016 was a year unlike one I'll probably ever have again. It was just an amazing year. Part of that was just the turn in the sector, a little bit of new capital coming in, but in reality, with all businesses that have a structural element to the way they're financed, when they stop working, they need to shrink to get below the amount of capital available to them. And so I was fairly positive last year when we were in Beaver Creek together that we were in the process of that happening, that the capital base had one more step down to a lower threshold. Even Joe Foster was getting redeemed at Van Eck, and not the Van Eck index product, but Joe runs an active fund there, and that was unheard of. Franklin Templeton, I think, had some redemptions as well. So the really well marketed stalwarts in the old mutual fund structure were losing capital last year. And I talk about the flow of funds all the time as being the most important thing in this business, and it's the most important thing in any business. In any business, when funds are flowing out, the companies can't go up. When I say any business, I guess I mean any sector like tech or natural resources, or within those sectors, oil and gas or precious metals or uranium. And let's just pick uranium now. That's where the money's flowing. And it's flowing there for really good fundamental reasons. The ESG lobby, even the likes of Stephen Guilbeault, who is directly affecting government policy in Canada and is an activist, just unheard of, frankly, crazy, has gone pro-nuke. And I think that it's now the focus of universal interest. So, but for the rest of the natural resource trade, access to capital remains spotty, unlike oil and gas, where the good companies are generating enormous amounts of cash flow. The precious metals companies, the metals companies are generating cash flows in buckets. Pilbara Resources or Pilbara Minerals in Australia generated incredible cash flow 2 years ago. That lit the spodumene stocks on fire. And spodumene in particular, because we'd had the brines go crazy for a couple of years before that in lithium, and now the lithium carbonate and hydroxide prices down from sort of, let's say the high was 60,000. Those products are trading for 12,000 now. Spodumene's down from 8,000, or 6% spodumene's down from 8,000 to sub 1,000. and I think that's just the commodity business. We'll have rolling bottlenecks across the complex for decades to come, and when you get a price response in the underlying commodity and cash flow, that's going to be the catalyst for individual sectors or metals within the overall sector, and then the equities will catch a bid, and that brings more capital. And it's a typical. It's just cyclical, deeply,
It definitely.
deeply cyclical.
Yeah, it is deeply cyclical, and we've seen that very much so in the last 4 to 5 years. So going back to the 2015 parallel, I just want to explore that a little more. We have problems in China right now. Very big warning signs, falling prices in China. The government's banning short sellers. The government is telling hedge funds they can't delever their portfolio. All kinds of weird things going on in China. There were also weird things going on in China in 2015. Also, in late 2015, there was a Fed that was talking about hiking, and they walked it back. And we've got something kind of similar today, where we have a Fed thinking about cutting, but not committing to cutting. So there's some macro parallels, and I don't want to go down that full rabbit hole because we'll be there for 3 hours. But there are some weird similarities to late 2015. So it's not as extreme as you mentioned in terms of how the gold sector just has like no institutional buyers left, although it has thinned out a bit, hasn't it?
Yeah, there will always be institutional buyers for gold stocks. It's just a question of how much total capital will be available to the sector, and I'm quite bullish on hard assets and gold in particular. Interest rates have, in my recollection of modern history, never gone up so quickly on the short end, and yet gold is $2,000 an ounce in U.S. dollar terms, and of course it's really performed better than that in many other currencies. And the Australian gold sector is relatively vibrant compared to the North American market, and I think gold has never been more relevant when one looks at the U.S. balance sheet and the alarm that is starting to grow around the amount of tax receipts that will be required for entitlements and interest payments, let alone defense spending, which has now become a much more important part of everyone's budget, it would seem. I imagine the government of the UK talking about rebuilding its armed forces to deal with the possibility of World War III. I mean, this is just ridiculous. So
Yes, I never thought I would actually see that. And if you look at Lockheed Martin, they have orders for the F-35 out like the next 20 years. Like they're going to be busy for decades to come.
Yeah, and let me just say this, and then we can go to juniors, which I think are the thing that I think everyone would prefer we talk about, and where I spend a lot of my time anyways. But let's just leave the macro at this. This has just been the greatest thing ever for Jerome Powell, and probably for the United States. Europe just slept walk itself. Slept walk? Europe managed to stumble into this horribly vulnerable situation around its energy supplies, and now the United States has to supply them with weapons, with soft military aid, and the high-end manufacturing that was going on in Germany and some of the other European countries, which was entirely dependent on cheap Russian natural gas, is getting distributed around the world And then on top of that, despite the fact that error rates in the production of high-end semiconductors are like 5 times what they would be with an Asian labor force, they're moving semiconductor plants back to the U.S. as well. And then on top of that, as it turns out, when it comes to artificial intelligence, these gigantic data centers that are all over Virginia, uh, and these other middle American states, uh, that's just electricity and cheap real estate. So the U.S. is in really a great situation, and all this talk about a coming recession, I think, is overblown. And Powell, because of this really, really unpopular inflation in gasoline and food, was able to jam 500 basis points onto the short end. And now the market moves dramatically merely on its inference of whether uh, he's paused or he's tightening or he's cutting. And we definitely paused. That I think we know for sure. And I think that for Jerome Powell, who I guess is going to be gone after the presidential election, this is a wonderful, wonderful daily routine. You get to come in and do nothing, and you get to talk. There used to be this concept at the Fed called jawboning, and these were sort of the pre, super transparency days. Greenspan went to pretty, dramatically improved transparency versus his predecessors. And then Bernanke and Yellen were just like, we're going to tell everyone everything that we're going to do. And then occasionally we'll have told an incredible lie. So Jerome is taking the Fed back to its opaque past and getting to move the market with a joystick that can be controlled by one finger. And he doesn't even have to raise or cut rates. He's back to this really, really interesting place where, the market is behaving pretty well with just the job owning, and this sort of reshoring trade and this transfer of I mean, Europe's just basically taken sort of 20% of its prosperity and transferred it right over to the United States because they've just engaged in such reckless energy policy. Yeah, Jerome's in a pretty good place. And so if you listen to Barry Sternlicht at Starwood, and I'd encourage everyone to go listen to Barry's interview that was conducted at the Global Alts conference in Miami, and you'll get just a beautiful understanding of how the commercial real estate investment constituency is suffering now, and how angry they are about the steep trajectory of rate increases and this U.S. labor force that doesn't want to come back to work. And I think that's great. I think Jerome Powell just loves watching Barry wave his arms about the fact that, the U.S. workers don't want to get in their car and drive into Midtown Manhattan to do administrative jobs. And I think he's delighted by the fact that there's a 1 point, that you've effectively wiped out half of the value of commercial real estate in the United States, and it hasn't resulted in a major problem. And Silicon Valley Bank was close. And this New York Community Bank thing, which has highlighted the fragility of rent-regulated properties and the loans associated with those. That's interesting. That's all going in a direction. But really, the peak for gold was when Janet Yellen was sitting in front of Congress, evading the question: would she guarantee all of the uninsured deposits of all of the other regional banks? That was the moment, and they got away with it. Is there another crisis on the way? I don't see one right now. But that's great news because gold's $2,000 an ounce, and things are
Yeah,
pretty good.
Yeah, there's very, very good points about Yellen and that blanket guarantee of the regional banks.
Mm-hmm.
That was a huge moment. That was a huge moment,
Mm-hmm.
and the Fed did the BTFP right then,
Mm-hmm.
where basically, if you had access to the Fed window, you could give them your subpar paper and get par for it, which was a wonderful
Mm-hmm.
scheme.
Yeah.
But okay. But
Hey,
anyway, let's
hey!
go.
One more macro thing before we leave macro.
Okay.
Uh,
Okay.
but this is something that just I find incredibly fascinating, and I see some good oil and gas people like Doc Jones on the call, and so I just need to say this out loud because I think this is fascinating. So under Lena Khan, the Federal Trade Commission has been as active in enforcing antitrust as it has been in a couple of decades, and she's gone after tech, and is being highly derided in one editorial after another, all the big newspapers, because the tech people basically use media better than anyone else does. And there's all kinds of jokes about, hey, Lena Khan managed to keep Amazon from buying the the vacuum cleaner company or the vacuum robot company. And and I don't have a view on all that. I'm not I have a philosophical view of antitrust and when it's important and when it's not. And I think it's really important in the society we live in today because U.S. capitalism has gotten very oligopolistic. But what's really interesting to me, Exxon buys Pioneer for $60 million. Chevron buys Hess for $53 billion. Exxon bought Pioneer for $60 billion. Chevron bought Hess for $53 billion. Oxy Pete buying uh, uh, is it Crown Point? Diamondback now buying Endeavor for $26 billion. So the this vital part of the economy, energy, is is all of the great antitrust work that was done around energy at the turn of the last century is all going in reverse now, and no one notices. And uh, I don't think we should have a long conversation about that. But I think it's really interesting that all of antitrust now is focused on tech because obviously people are very uncomfortable with tech's control over especially young voters and tech's
Mm.
ability to sort of frame the world that they perceive they live in. Young voters. I'm old. Uh, and all the while, the energy sector moves back towards oligopoly. I think that's
Mm.
fascinating. And the last th-
Yeah, that is. That's
And the
a yeah.
last thing I'll say about antitrust, which I find fascinating now, is no one seems to care that BlackRock and Vanguard and Fido have so much of the AUM of the American market, and you've got effectively Larry Fink either making government policy or an instrument of government policy, and maybe they like that. Maybe that is the ultimate in command and control economies is having a private enterprise control 9 trillion of 40 trillion of equity value or whatever it is, whatever the total value of US assets is, and that individual being sort of pivotal in determining the way corporations behave. But I was just watching all these oil and gas companies come together and thinking,
Hmm.
this is going to be important going forward for the energy markets, and no one cares. So let's move away from macro,
Hmm.
unless you want to grab the baton and go off on that. But it's
Yeah, so there's single digit number of companies who basically own America, and in turn have strong influence on the entire world. And Vanguard and BlackRock are two very large, very powerful corporations that have a huge amount of assets. And scale is king, and that's why we have antitrust laws. I mean, this goes back to the early 20th century, 1920s, 1930s, we have antitrust laws for very good reasons, because eventually when a company gets so big, it controls so much, and it can buy off politicians and presidents,
Hmm.
and there's a reason why the US has these laws, and so do other countries. So that's a very good point. Let's turn to the gold mining sector, the junior mining sector, a sector that's seeing some consolidation. There is some consolidation in the gold sector in the last
Hmm.
year. We're seeing it start to work its way down the food
Hmm.
chain. We obviously had the Newmont big acquisition of Newcrest. That was a big deal. And then we've seen some smaller ones in the mid tiers, and we even saw Nighthawk merged with another junior.
Manita Porcupine.
Yeah, so we're starting to see this. What's your feel for where we're at in this cycle for the gold sector, and how does it affect the
Mm.
juniors?
Yeah, not much has changed since the last time we discussed this, or maybe it was when I was last on Crux. The movement towards consolidation in the bigger companies may finally be over. I'm not sure what the next major consolidation would be. And I think the message has been clearly received by the best of the aspirants, or the top of the middle, that they're going to need to grow towards the size of Newcrest in order to be relevant to be taken over by Newmont or Barrick. Um, and we still don't have that consolidator, those disruptive consolidators in the middle of the market. So right now, there's a process being run by RBC for Greenstone, and so that's the gold mine that's being built by Equinox, and 40% of that is owned by a private equity group, Aurion Mine Finance, and that's on the block right now. And I'm told the starting bids have been in the $800 to $9 million region on that, but that's hard to know. And that asset is in Canada. Ross is doing all the heavy lifting there in terms of building that asset, and has probably gotten it through all of its riskiest phases, including having to do this convertible debenture around the gold show that got people so enraged. And so Ross has taken all the bullets on that, and now it's just a good looking, so let's say I think it's maybe 400,000 ounces a year, so it's going to produce. So 40% of that's um, available and on the market now. And I think Equinox would dearly love to own that, but of course, uh, that would have to be supported by the institutional market, such as it continues to exist, or as in the state that it's in now. And I think that's possible, and by some debt financing as well, which would create some more risk for Equinox. So that's a perfect example of the issues in the junior market at the moment. There's a big asset of merit that's getting very close to production that's for sale, and the big gold companies are looking at it and have to look at it. And I don't think, for instance, that Kinross buys it, because I think Great Bear, is a major capital project for them, and I think it's actually the best asset in development right now. But certainly Goldfields is looking at it, and there are a couple of the Australian guys looking at it. And once Greenstone clears, then Newmont will take the surplus assets that came from its combination with Newcrest. So Eleanor, Musselwhite, Cripple Creek, um, maybe the Peruvian assets, maybe Yanacocha, maybe the assets in Suriname, maybe Africa entirely, and those will be put on the market. So for juniors now to be relevant, they need to make big discoveries with lots of blue sky, in my opinion, because there's quite a queue of assets that are well known, well understood, well studied, that are coming on the market, and maybe the Newmont inventory won't be a problem. Maybe it'll all get scooped up. Maybe Peter Baroni will use some of Allied's market cap and get some support and just scoop up a whole bunch of that stuff. And some of it's just garbage, frankly. Um, it's incredible the way the street's perception of Eleanor has turned around from when it was sold. So that's a challenge for the juniors right now, and I think we discussed it in one of our Twitter spaces, and I've discussed it in other podcasts. And the problem is it doesn't change very quickly. So to move the needle as a junior at the moment, you need to find something that is on the higher end of quality. And look at Hercules, great example. They move the needle. This is a very interesting discovery in a very interesting place, and Mark Bristow has let everyone know that that's the case.
Yeah, what did you think about that? I think we exchanged text messages a couple months ago about it very briefly, but do you recall Barrick ever doing something quite like that with a junior after one it basically one hole? I mean, obviously the project has been worked previously, but nobody took the view that it was a deeper copper porphyry, and it was buried under 300 meters, and then this new hole into it, and they found this enriched bornite portion, the 45 meters of almost 2%, and also the fact that it's a copper play. So what were your thoughts on Barrick going so quickly into that?
Well, it's peanuts for Barrick. What's interesting is everyone in the industry talks about how they never went and saw any of the drill core, and that the term sheet had markups on it directly from Mark Bristow. And I think it was a watershed moment in juniors. Mark's rules were no passive investments in equities, no investments in companies without either a strategic alliance or a joint venture direct interest in the property. And all of a sudden, he's throwing, I guess it was 20 million at Hercules, and buying Crescat out of half their warrants and buying it in the market beforehand. And it's just, I think, emblematic of the lack of discovery inventory that's out there. And discovery inventory meaning new discoveries of merit, not just, oh wow, look, there's 2 grams gold here in a place we didn't know there was 2 grams gold. So, and sorry, 2 grams gold over 100 meters is significant. As Lavras gold,
2% copper.
Yeah. Well, no. The point is, if you find, if you drill 50 meters of a gram gold now, there was a time when that was pretty significant, and anything over 40 gram meters was deemed to be significant, especially if it was a wide mineable interval. That's not going to move the needle now, and so you look at the other things that have moved the needle. Lavras Gold's discovery in Brazil really moved the needle. 340 meters of just over a gram. A lot of us who know Mike DeRose or knew Mike DeRose understood the potential significance of this, given who Mike is and his legitimacy as an explorationist. And I think he's been a little bit disappointing to everyone in how conservative he's been since that discovery. But Kinross came into that financing at $1.35, even though the stock had shot up, and they didn't take 10%, and I think that's really interesting and potentially significant. And so, yeah, to move the needle right now, you need to find something that could be big, and with better than industry grade characteristics.
Yeah, something new and something that could have scale. Though, yeah, that Lavras, discovery hole was definitely a bit of an eye popper. It was reminiscent of Snowline in some ways. Speaking of Kinross, Kinross is a company that's a shareholder of Aurion. Obviously, they're a shareholder of Lavras. I was doing some work over the weekend, just looking at top 5 or 6 gold producers and just seeing from a valuation standpoint, not a technical standpoint. And Kinross really stood out to me. So they're basically, it's trading at about 12 times earnings right now, 12 times full year 2024 earnings. And it's trading at its book value. Now, I know the book value is very treacherous. You can't just go off of that, but it's just interesting from a starting valuation standpoint, that looks pretty attractive to me. And I look at their track record the last couple of years. Most senior producers have disappointed quarter after quarter. Kinross has not. They've beaten more quarters than they've missed the last couple of years. And then they have that Great Bear asset just sort of in the pipeline, on deck. Maybe it will be in production 2030, 2031. I have no idea, but it's there in the pipeline. It's definitely a tier one asset. What are your thoughts on Kinross here? And by the way, they report earnings in a few hours.
I think it's probably where Alamos was the year after they took over Richmont. So John just murdered those shareholders. He absolutely murdered them. But with a view that this asset was going to be an important part of the future of the company, and understanding that successes in high grade underground mines, when they're top quartile, are really, really valuable, and certainly that was the industry's experience at the time. You had Agnico being one of the top gold companies in the world, based primarily on the strength of LaRonde. So they had Agnico had other assets in Nunavut and Finland, and Finland's a really nice underground gold mine as well. But LaRonde is the gift that's kept on giving, and you could argue that perhaps it would be a more valuable company if they hadn't ventured up into the Arctic. And of course, Kirkland Lake had become this great sensation on high-grade underground in Kirkland Lake, and then, of course, this wonderful discovery in Australia. And John had taken over Young-Davidson, which is a 2 to 4 gram underground deposit, but with lots of forward visibility. And I think that whole gold belt, that Matachewan area, actually has a lot of potential. We'll see if they explore it more. And then Richmont it's just been a jewel box, very, very similar to the sort of cash flow profiles that you got out of the Swan Zone or the Phoenix Zone for Kirkland Lake. So Kinross grabbed a hold of Great Bear, understanding that finding a significant gold deposit in rocks that had never considered to be prospective in Red Lake probably had a lot of upside. And I think that it does have a lot of upside. And I think that from what I hear, and I don't hear this from Kinross, I'm hearing it, we don't share that kind of stuff with me, but from what I hear from my contacts around Red Lake, things are going well there. And it's going to be a very high-grade open pit, and there'll probably be some underground mines there, and it'll probably take Kinross's return profile and make it look a lot like the Alamos return profile in the last 3 years. And Alamos, until recently, has been one of the best performing gold stocks in the world.
Oh yeah, but by far, I mean, that's been a standout until the last couple of months. So Kinross is actually, I just looked it up, 9.8% shareholder of Aurion, which you're the chairman of AU on the TSXV. I think you're at 11% now. Is that right?
No,
David?
I just crept over 10 again for the 6th time. So I've been diluted down in 6 financings, and then bought my way.
Okay, so you're just above Kinross.
Exactly where I like to be. Yes.
Okay.
And sorry,
So
nothing against Kinross. I think in a world where capital is as difficult to come by as it is today, that it's better for the chairman to be able to say that they are the biggest shareholder and that they take nothing from the company and that they don't take stock options, and that we as a company are thinking day and night about how to make the stock go up. So those are, having unqualified absolutes is just part of the marketing, and it's not cheap for me, but I think it's more vital today than it's ever been.
Yeah, your marketing program is to buy $1 million of stock a year. Yeah.
Mhm.
Okay. So there was some Finland news recently, and I actually shared it on
Mm.
Twitter X. A new president of Finland, and actually he looks like a pretty solid guy.
Mhm.
What do you know about that, and what impact does it have for your company and for gold exploration
Mhm.
in the country?
Mhm. I think probably not much. The great thing about Finland is there is no one individual who determines how policy will move forward there. It's a very, very collaborative government situation. It's almost always in coalition. What I like about the incoming president is that he was supportive of nuclear in the country, and that was controversial at the time and controversial in Scandinavia, and now it makes Finland a standout in Scandinavia, and really creates an energy profile, a green energy profile for Finland that's very unusual for Europe. So I like this individual. I think, like many politicians in Finland, this individual is a pragmatist, and that we've just had nothing but a positive experience there. And if you don't follow the rules in Finland, and you want to drill in Natura 2000s, it can be tougher for sure. But you follow the rules there, you get a very transparent result, as happened with Agnico, who had one of many plant expansions challenged locally, and the Supreme Court settled that issue within a year, and in a very transparent fashion. So yeah, I think minimal impact, but I think that's a good thing.
Hmm. So the central Lapland gold region of the country is in the north. And can you tell us a little bit about it and which companies are prominent in terms of gold mining and mining in general in this area?
Mm, sure. Well, Kittilä is the largest gold mine in Europe, controlled by Agnico Eagle, and 8 million ounces in all categories. Runs to about 5 grams, which is on the low side for an underground mine, and it's double refractory. It's uh, it's encapsulated in acicular arsenopyrite. So there's a pressure oxidation circuit there, which is about the most energy intensive, chemically intensive thing you can do in mining. But they make excellent money, and they've been well received by the communities. And part of the issue is there's just a couple of communities up there. It's fairly sparsely populated. So you've got Sodankala that we work out of, Kittilä, where a lot of the labor force comes from for Agnico, and then Rovaniemi, which is where the airport is, and which probably exists to service this massive Santa Claus village that they have up at the Arctic Circle. Tourism, I guess, sorry, is the better way to put it. And and I think, interestingly, as tensions rise in Europe, and if you, depending on where you are up there, you're a couple hundred kilometers at best from the Russian border. I think that's probably a part of Finland that they'd like to have more Finns in. So it's as you know, the structure of the military there is you're born into it, and you do a couple years of service, and you train, and the way in which they've dealt with the historical legacy of their conflict with Russia and Germany is all citizens are a member of the army in Finland, and there's constant preparedness. Everyone goes through training, and so just it would probably be better, I think, for more development to occur, for there to be more jobs and more industry, and higher population up there. And that's a bit macro, but the rest we'll rest it at this. It's a great place to build a mine. You're either in mining or you're in forestry up there, and there's a military training ground, probably 20 kilometers away from where we are, and I think it's maybe one of the best places in the world to make a discovery and to have transparency to get it through to production. And that's it's not just
Hmm.
Ketel up there. There's Kivitsa, which is a giant open pit, relatively low grade nickel mine that used to be in the belly of First Quantum and is now Boliden. And the best polymetallic discovery in the world, Sakatti, which not very many people know the details of, is about 10 kilometers away from the middle of our Risti property. And that's being developed under a Natura 2000 by Anglo American right now. And that's been a long and careful permitting process as they propose going outside the Natura 2000, sinking a shaft, and then drifting in underneath. But you can only imagine what the value of that metal is as a result. And it's just, they're stunning nickel grades, copper grades, PGE, and gold grades. And I think there's another suite of elements associated there. So all this is to suggest there's been lots of very, very interesting fluid flow underneath this part of Finland. You got the best gold mine in Europe, let's say 50 kilometers as the crow flies from Sakatti. You've got this nickel mine being run by Boliden. You've got the Rupert discovery, which is one of the best economic discoveries in the world. You had our Amorusko discovery and the other discoveries we're making. So I think it's really got a bright future, as I would say, given I own 10% of this company. But I don't think I say that without evidence to support it.
It's interesting. I just pulled up their website for Anglo American in Finland, and you would never know it's a mining company. It's all about community, environment, technology, media. But yeah, it is a terrific new discovery, and they have been carefully permitting that, as they should. I want to open up to a question from the audience. If anybody has a question for David, we've got about 10 minutes, and we'll take one question. But I guess my final question is, what's next from Aurion? I know you guys are working on a few things, and so is B2 Gold, who's your JV partner at Helmi. What's next in 2024?
More exploration results, and always the potential for, therefore, new discoveries, which I think are the most valuable thing in our business. Rupert drilled 10 holes into Hickory and added 800 million of market cap on just therefore less than $2 million spent, maybe less than that. And of course, those, Rupert existed for years and did lots of base of till work and spent, maybe $20 million total to get there. And we're running a similar exploration business in the same rocks, closer to the structure, and are in the process of making new discoveries. I like to think almost every day, although when you're going to drill the hole that is the tipping point is always the open question. But every hole we drill, every hole B2 drills, threatens to be something that the market perceives as a new and significant discovery. And this is one of the best places in the world to make that. So I had expected results by now, but Maddie and I don't get to talk a lot as I need to stay free to buy stock in the open market. And so I would imagine that we'll get a slew of them, and that they'll flow pretty continuously, because there is significant work being done now on significant parts of the properties. And I probably can't say too much more than that. But yeah, this is an important year. And of course, Rupert's doing their pre-feasibility study this year. I think it'll look great. And I think the capex will go up, and I think the economics will be, will survive further scrutiny, but probably with an increase in the gold price that they use. But I think that the writing's on the wall there. In order for that whole area to go into the belly of a major, I think there's going to have to be some collaboration. And I don't want to get people too excited about that, because we're not in control of that process. B2 is a real important constituent in that process, and we are respectful of them and their motives. And maybe they'll decide that they don't want to be in Finland by the end of this year. Maybe they'll decide they want to take over Rupert. Maybe they'll decide they just want to keep exploring. But for Rupert to get sold, it might be easier if there was some cooperation. And And I think that in the industry today, we all want to see things happen on a rational time frame. So I'm this is going to be an interesting year in my view.
Yeah, I like to hear that. At the end of last year, so roughly 7-8 weeks ago, I made a video talking about my 2024 gold picks, and Rupert was one of them.
Mm-hmm.
And I said in the video, look, it's about 390 now. Let it pull back to about 350. I think it's a good entry point around 350.
Mm-hmm.
So as I check the chart now, it's gone through my entry point level. We're at 309 right now. And I'm gonna pound the table on that a little more. I really think that this is a pretty attractive level, and a lot of this weakness in Rupert in the last year
Mm.
is due to the gold price. It is literally the gold sector, and in the last month, it's gold dropping from 2090 to 2004 here today, and just the overall sentiment. I feel like this just based upon what they have. 4 million ounces and likely growing. And good grades, very, very nice ore body.
Mm-hmm.
Just basically almost everything that I like to see. And obviously that's your neighbor at Helmy, and B2 has 70%, and you guys have 30%,
Correct.
right? Okay.
Mm-hmm.
We have no questions, and I'll just point out, I'll correct something I said earlier. I looked at the SETI, and it's not, you haven't bought $1 million worth a year, but you've bought $1 million in the last 2 years, I think, or maybe a little more than $1 million. So since January 22, it's like about 2 million shares. Does that sound about right, David?
I think so. I can't remember the details of it. I was certainly in blackout for a lot of last year. So I think I bought $600,000 worth of stock in the last 12 months, and was it 2 years ago that I bought $2 million worth of stock in a year? I'm not sure, but yeah, not. I mean, for Ross Beatty, nothing. For me, not insignificant. And I certainly wouldn't. I mean, I think it's an important part of our ethos that management show up in the market and buy stock and make sure that everyone understands that we are aligned. But I also don't want to overplay the significance of it, because I'm very respectful of the real whales in this business, like Ross and Eric, who have the capital to make a difference. And certainly Colin Cattell over at Palisade gets behind his names and writes checks to Nevada King on a regular basis. So um, it's a small group, and I'm merely a part of it.
Thank you. I really appreciated this update. I feel like, we can always have lengthy conversations. We just scratched the surface here today. I'm a shareholder of Aurion, and Aurion is a sponsor of Goldfinger Capital, and I appreciate that support. Until next time, David, this is exactly an hour. I think this is perfect, and I've got another conversation coming up. So thanks a lot for your time again.
Thanks so much, Robert. Really appreciate you producing this content.
Oh, we got a question. Hold on. Let's
Oh,
take a question. Do you have time for a question? Oh
sure.
no,
Yeah, of
hold on.
course.
Here. Let me see if he still wants to talk. I just invited Stella Robject. Oh, I think he got shy there. All right, we'll wrap it up. Cheers. Have a great day, David.
You bet. Okay. Thanks, Robert. Cheers.